Welcome to the Fintech Founder Journey podcast, where we explore great fintech products, great fintech businesses, and great fintech leaders. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital, an expert firm that accelerates product development for fintech and blockchain scale-ups around the world. In today's show, I'm joined by Jay Ganatra from Infinity Capital, and we'll be talking about early-stage fintech investing. In today's episode, we're sponsored by Nona Digital. Working with us to accelerate your fintech product means you get access to our expert product squads that cover development, UI, UX, product ownership, architecture, and that have been building products together for a very long time. You get the benefit of a 40-person studio that is big enough for no key person dependencies to exist, but small enough so that you're always close to one of the principals. And you get the benefit of our reusable component library, which basically means we're often able to build your product faster than anyone else could at a comparable standard. As one of our clients said, Nona is the type of business that paints the back of the wardrobe, because if you want to be the best in the world, this is the kind of thing that you do. To get in touch with one of our principals or myself, head over to nona.digital to book a call directly. And now onto the show. Today, my guest is Jay Ganatra, who is an interesting type of venture investor. After completing his studies at Duke University, Jay went straight into investment banking as an analyst with Cogent Partners. After a few more roles in the investment space, he joined Yelp, where he ended up as GM of online ordering. In 2020, Jay joined PayPal Ventures as senior director and partner. And all of this has led up to his current focus as the co-founder and managing partner of Infinity Ventures, which is an early-stage venture firm focused on investing in fintech and commerce enablement. And I think he brings an interesting flavor to all of this because he sat on both sides of the table, and that's what we're going to talk about today. Welcome, Jay. It's really great to have you on the show, and thanks for making the time.
Thanks, Mike. Really excited for the conversation today.
Cool. Let's get straight into it. So typically, I don't speak to investors on this show. Typically, I speak to founders. And typically founders that have sort of hit product market fit and maybe raised a Series B or a Series C. So typically not like very early stage, but I'm really interested to start highlighting more of the investor side of the conversation, both because I think it's very useful to our listeners to understand the inner workings of how investors are thinking. And because I just think it's absolutely part of the puzzle, right? The FinTech Founder Journey doesn't exist in most cases without the venture side of it, the investing side of it. So let's get stuck into sort of the first question, which is basically, talk to me about your journey in a nutshell from finishing uni, getting into investing, sort of realizing that you want to get experience from the other side of the table and then circling back to investing. Talk to me about like how that evolved, what your thought process was and what your experience was like.
Totally. And thanks again for having me. Really, really excited to chat about this because, I think first one thing that you said originally is you normally have founders on the podcast, and I think that's great because it probably makes the podcast a lot more interesting because I think the founders have the more interesting stories to tell. But I do agree that at least my background is one that has kind of taken a couple different paths and hopefully led me to a great spot to become a great investor. And that's what we're looking to do at Infinity. But, my background, as you mentioned, coming out of school, went into investment banking, wanting to get, a broad exposure to the overall markets, understanding the financial markets at, the highest levels. And I think in a lot of senses, the trend you'll see in my career is to go from a very wide aperture and then kind of narrowing down into the focus to kind of where we are today or where I am today. So starting at Cogent, where we were looking at literally all sorts of assets, from real estate assets to venture assets, private equity, you name it. It was really focused on alternative assets across the globe. And that gave me great insights into how people think about valuing these different companies. I went over to, I took that, wide lens and then actually went over to Sabre, which is a travel technology company, a business that was started, back as a combination between American Airlines and IBM. So a very legacy type of business, but one that was, making their own digital transformation and becoming more of a software business over time. That's actually where I met my partner for Infinity, Jeremy, who was the VP of Corp Dev there. him and I worked together and then began our long personal and professional relationship that's kind of led us to starting Infinity. That gave me great insights on as how one of these great cash flowing businesses runs. How do you think about redeploying that capital into new growth verticals? And that's how Sabre went from this GDS business, which is this like classic, taking tolls off of a bridge and tunnel kind of thing, and then taking those tolls and reinvesting it into software and going from transactional into, sticky like subscription revenue business. And that's what led them to eventually being able to go back out and go public. It's a great business. One of the tougher things about it, it was private equity owned. So it was always focused on margin expansion, things like that. And, always thinking about the cost side of things. I was very interested in venture from the fact that, it wasn't about trying to reduce heads. It was actually about hiring. It was about trying to grow the pie as opposed to just taking more share of an existing pie. And so I went to a group called Industry Ventures in San Francisco. It's a tremendous firm and one that, has a very like unique perspective on the venture markets. And they'll look at deals from healthcare to software, digital media, internet, wherever. But really with a very, value investor lens. Hans is from Columbia Business School, classic, type of investor from there, who started the firm. And that gave me a great perspective as to how different investors at different stages of the venture capital market look at analyzing companies and what do they care about. Early stage investors have a very different lens than pre-IPO investors. And luckily at Industry, we worked with all of them. And so for me, as I now look at, Infinity, even though we're doing early stage investing, I kind of know how a Series B investor thinks, how a Series C investor thinks, and hopefully can help guide our companies as they grow. But one of the things at Industry that I realized about myself was that, I was an investor. I would sit on boards for our companies. I was asking good questions when I was on the boards of these companies, but I don't think I was asking great questions. And part of that realization was just, I was what any smart person who can read an Excel model and a PowerPoint deck could ask certain questions about, why is revenue going up this when sales is going like this? Like, that's like a good question. But actually understanding what it is to go out and scale a sales team from, founder-led sales to, a 40-person sales team is very different if you haven't done it versus if you have done it. And so I realized that like I was lacking that entrepreneurial empathy, and really being able to say like, hey, this is the kind of pitfalls that you're going to see as you try and do this. Like, what have you done to prepare for this? And those are the questions I wanted to be asking. And so I left Industry after 3 awesome years there, and moved over to Yelp, where I originally joined to lead corp dev, but the eventual goal was to always go buy a company and then kind of move into an operating role. And that happened frankly faster than I think I was ever intending to. But about 10 months in, we acquired a company in the online food ordering space. Myself and Mike Ghaffari, who's another great investor over at Canvas, we moved over into an operating role there, and basically scaled that business from about 12 million in revenue and 100 or so employees to about 75 million in revenue and 450 employees, multiple offices. Managing that business through a very dynamic time in the food ordering space that was, as DoorDash was starting, Uber Eats was starting. It was a crazy journey, and eventually, again, became GM of online ordering there. I think, again, that experience, both on the entrepreneurial side and being able to talk to founders about, hey, like, I know you're facing this tough org chart decision. Like, you want to think about replacing a B player with an A player that you're about to hire. How do you manage the team if you're going to do that? It's one thing to be able to say that and like use broad venture platitudes to say like, yeah, you should replace B players with A players. It's another thing if you've actually had to go and have that conversation with someone and say, I know how hard this is going to be. Like, you're going to feel like crap. And sorry if I can't say that on this, like after you, okay, I'm allowed to do it.
You can say whatever the fuck you want. It's fine.
All right, good. I remember having to do that where I had to let a guy go who had done nothing really wrong. He just wasn't the right guy to scale the business to where we needed it to go. And I was going to be like holding back the rest of the team if I didn't make that change. And if I haven't actually done that myself, I can't go to a founder and say, hey, I've done this. Like, I know it's going to suck, but like, you've got to do it because that's the best thing for the entire company and even probably for this person because they've got to grow themselves. And so getting that experience when it really helped me as I've kind of moved into becoming an investor going over to PayPal and starting to scale the venture fund there when I moved over, and we kind of took what was somewhat of a, kind of trial investing thing that the team was doing and building that out into a real, full functioning venture arm that I still consider to be one of the best corporate venture arms, in the world. And then hopefully, replicating that success, here at Infinity. So that's a long way of saying that, like, I think all of these little stops in the journey have really helped me to prepare myself for, as we, start making these investments at Infinity. We've done 8 so far, to be able to actually help these entrepreneurs in their growth journeys, because everyone's trying to frankly figure it out. There's no one playbook. Every situation is unique. And so you can only rely on the knowledge that you have and examples that you have from your past to help these entrepreneurs grow their businesses.
Man, Jay, that was so great. I mean, I'm just going to try and extrapolate some nuggets out of that. So I think, what I heard loud and clear there is a lot of first-time investors, especially who've never taken money before. There's kind of this question of, like, what kind of money should I take? And really, it's like the strategic investor, not just money, because I don't want to be flippant, but it's relatively easy to get money. It's not easy to get money from the right people that are going to help you strategically. And that conversation is usually quite difficult to explain. You've just explained it so well. It's kind of like when you can take money from people who have actually been in your shoes and done the things that you're doing, you have this thing, which I've actually never heard the term, which I feel like I should have, but you used a beautiful term, which is entrepreneurial empathy. That is just gold. It's kind of like, when you have an investor who understands the financial elements, the raising elements, the scaling elements, but doesn't necessarily understand the operational elements, and exactly like you said, what it feels like to hire and fire, what it feels like to let someone go who's a great person, possibly even really hardworking and committed, but just not that A-team player. This is shit that you can't tell someone how to do it. You've got to be able to experience it. And it's you just articulated that so well. And it's kind of like, if I was a startup looking for capital and I heard someone like you speaking as an investor, I would just get so excited because I'm like, man, this guy's going to give me cash, sure. But he's also going to mentor me through some difficult stuff that you just can't know how to do it unless you've done it. There is no, you can read Radical Candor, you can read Jim Collins, you can read all the, get the right people on the bus and get the wrong people off the bus. But unless you've actually been through that emotional turmoil of how do I pay my staff? How do I hire and fire these people? I'm running out of runway. This is stuff you can read as much as you want, but until you've done it, you don't really understand it. So, I mean, I totally get it. And, in our pre-interview, I think you said something like, 80% of venture funds are the same. How do we differentiate? And I think you've just explained that. I guess one of my questions though is, that's you, right? That's Jay. But you're not a one-man band. Infinity Ventures is a number of partners, and I'm sure you're going to grow and scale. My question to you is, how do you take that DNA that sits in you? How do you take that experience that's in you and make it pervasive across Infinity Capital? Because I'm sure, you guys are new. Just for the listeners' benefit, I think Infinity incorporated about 6 or 8 months ago. I mean, it's really new. Yeah. And I mean, you've already done 8 investments. So, my suspicion is we'll be talking in a year and you guys are going to be 5 times the size. So, how do you take that DNA and scale it into your team that you're no doubt growing? Talk to me about your planning or strategy there.
Totally. Well, first, I think that's kind of be the ethos of our firm, right? Is we're not, the people that we hire and the people that we're going to partner with are all going to come from a background like that. My partner Jeremy, who again, he was the first corp dev hire at PayPal when they were still part of eBay under David Marcus. His first deal was Braintree Venmo. It's a deal that's kind of basically, one of the major, best acquisitions, I think, of all time. And then went on to do another 20 some odd other deals that have really helped to kind of shape PayPal into where it is, as well as running things like BD, New Ventures Finance, like a number of our, the partnership deals that we've done with Visa, PayPal has done with Visa and MasterCard. All of these very kind of seminal moments for the company, he was very involved in. And so he's another type of person that, obviously brings that type of experience and know-how to entrepreneurs, and Mario as well, being a fintech investor for many years, working closely on the boards of a number of, great fintech companies like Bill.com. And then while he was at PayPal, doing a number of investments as well, and really helping us build out our team. Like we went from being, frankly, two or three of us into being, now a 10-person, 12-person team across the globe. There is certainly a journey there that, you can take a lot of lessons from. But I think, as we think about hiring for our firm, there's kind of two different types of experience that we really want. There's the operational experience of just building and scaling a team. And then there's also deep fintech experience. Like fintech is not one of these things that you can just kind of walk into. And yes, I mean, you can walk into it and start making bets, but it's a highly regulated industry. And that regulation changes by market. There's a reason why when you think about PayPal's a $200 to $300 billion company, wherever, depending on where the stock price is. But it really actually only operates at scale in like 6 or 7 markets, which is kind of fascinating, which means, and part of that is because there's local regulations that apply. And it's actually hard to operate your business, market by market, because you need the right licenses, and to get scale in any of those markets is difficult. And so I think for us, as we look to hire people, we want people that have that combination of fintech expertise and then also that operational expertise of scaling a business. So, we have a venture partner. He just announced that he's, kind of joining us. So, which is Levi King, and he was the founder of Nav, which is, a business that helps SMBs with getting access to lending and financing. He's a 2-time founder. He also founded a company called Lendio, which had raised money from Kleiner, and he's kind of been through the gambit of successful venture companies that have had ups and downs and been in the valley of death. Basically, he's seen it all, and so having someone like Levi who can call our founders and kind of help coach them through their times as well. Those are the types of people that we're going to be adding to our firm over time. Because again, like venture, at least the way that we want to do it, actually doesn't scale. It's actually not like a great, in some senses, a great business. It is, boutique venture capital is meant to be, the partner working with the entrepreneur in a very, close relationship over a decade-long time period as they take something from idea to exit. And that is a long, long time process. And, there are many different ways to play this game, but the way that we're going to play the game is to be doing it in a very, kind of traditional, smaller partnership where all of us work with our portfolio companies. And again, particularly at the early stage, our founders are getting not just access to me, they're getting access to Jeremy, Mario, Levi, and the rest of our network that we kind of bring to bear, because we want all of these and need all of these companies, frankly, to succeed, for us to succeed. And there's really that strong alignment of interest.
Yeah, again, so much wisdom there. I guess this is a good segue into the question, just for the listeners' sake, just before I hit record, Jay was saying, it just feels like the craziest time in fintech and there's so much opportunity. And then Jay said, but I feel like I've been saying that for the last 5 years. So, we're clearly in a bit of a, I don't know what word to choose here, but it's very buoyant, the fintech space. I don't want to say any of the negative connotation words to it, but we're in it. It's massive. Capital is flowing enormously. There are just endless amount of startups that are popping up, scaleups that are just raising crazy valuations, 100 times revenue, et cetera, just crazy things going on. Just tell me what you're seeing through your lens. I mean, you've already told me that it's very, very buoyant, very active, tons of deal flow available, amazing founders. But give me a sense of just like what you're seeing in the fintech markets globally, from just through like your lens, what your observations are at the moment.
Yeah, I mean, I think buoyant is a great word for it. I think that there's just this interesting time period where you're kind of, it's a combination of a lot of different things happening. One is that people are recognizing that these, payments businesses and fintech businesses can get to massive scale. Like you're looking again at like a PayPal, a Square, Affirm, the Afterpay transaction. And they're seeing, tens of billions, hundreds of billions of dollars of value being created. And frankly, companies that aren't all that old, a decade long to create that much value is pretty crazy. And they're seeing the continued success of companies like, even Visa and MasterCard, older legacy businesses that continue to just click along, and the overall macro trend of the digitization of commerce. and the reduction of cash and basically making it easier for people to get access to capital. All of these like macro trends are playing into the excitement of the market that we're in. That's all great. And I think that will, continue to create a great funding environment for founders for the next, 5-10 years, frankly. I think the other thing that you're seeing is like from an entrepreneurial perspective, and one of the things that excites us a ton is, there are great people that have worked at all of those companies I just mentioned, Affirm, Klarna, PayPal, Square, et cetera, that have seen their, private stock portfolios of, those company stocks go up 10x, 50x since they joined the company, maybe pre-IPO or whenever they joined, anything in the last 5 years, right? And these are people that are now saying, hey, I have this domain expertise. Again, fintech is not something that just somebody can walk into and start. Like, it does require some amount of knowledge. And they're saying, okay, like all of this technology that exists is pretty legacy. Like if you think about Chime, for example, Chime was built on top of Galileo. Like Galileo is a 20 some odd year old company. There's nothing wrong with Galileo. It's a great product, great business. But like it's relatively like legacy, quote unquote, technology. There are people that understand where those, pitfalls are, and they're going to be looking to build that next generation of infrastructure companies to help then the next generation of like consumer applications or business applications build on top of them. And so we're seeing a lot of people that have seen the underlying guts of fintech and saying, hey, this could be better. And now actually have the risk appetite to go do it because their personal lives are somewhat de-risked. And so what you're starting to see is just so many great founders leaving these kind of incumbent type companies to create the next wave of disruption. That makes it a great time for us to be an investor as well, because there's just so many people that are, knowledgeable about the space, know what the problem set is, know exactly what they need to go fix, and frankly, like done parts of it before, that it kind of de-risks the bet for us. And so for us, like that's the part that's exciting. I would say that's super, super exciting. And I can't help myself, but you said Square, you said PayPal, you said Visa. These are all companies that are paying pretty serious attention to Web3. Visa is doing some really clever stuff, becoming the sort of fiat on-ramp and off-ramp for every single crypto company that wants a debit card. Kai Sheffield is leading an incredible team and job there. They're really smart in what they're doing. Obviously, Square has made some incredible observations. The one that I'm most fascinated by, and I'm sure you've heard this, but they figured out that when you add crypto into a fintech, into an application, you see engagement go through the roof. When there's crypto in the application, people are coming back 20, 50, 100 times to check their app, where maybe they would only be looking at it once a day or once every second day because of the volatility. So this volatility is turned from a kind of a bug into a feature, right? Very interesting observation. Like I love that. I was like, wow, that's a deep insight. So even if you're not making money necessarily from allowing crypto trading or buying or selling or investing, you're getting huge engagements. So I guess my question to you is, you've been around the block. You come from sort of, let's call it like fundamental finance background and fintech background. How are you, and I want to get this question right, how are you thinking about Web3 when you're sitting on the other side of a table sort of considering an investment? Because, you're not a blockchain investment company, you're not a Web3 investment company, but no doubt you're aware of this. Are you looking at these fintechs and going, how is Web3 going to disrupt this? Are you just like, nah, look, we're 5 years out, 10 years out? Are you like asking that question directly of your portfolio companies to say like, how are you thinking about this move to Web3? Like, just, it's a difficult question, and I hope I'm getting it across here. Like, no, it's a great question.
Yeah, go for it.
It's really funny because actually the last, this happened today, into a company that we were chatting with and kind of saying who they are. They're kind of in the crowdfunding for, investment assets type of space. And, we were chatting with them. That was the question that I asked them. I said, look, like, how do you think, Web3 plays into your space? And do you, at some point, a lot of these crowdfunding mechanisms, right? Like they could turn into a DAO. And that's what you're already seeing some of that stuff right now. I think that will happen kind of no matter what. I do think it'll be, we're kind of in I think it was McKinsey's like hype cycle, right? Like I think we're probably in that like, I forget what the first peak is called, and we're probably headed towards some form of trough of despair for a little bit. And maybe that's what the crypto pullback right now is.
I think it's like the euphoria or something. Or hysteria, something like that. Yeah.
And that's in particular with some of the DAOs and things like that. I think that, it's all interesting. I do think that eventually is how I do think a number of, and we'll stick with this like investment idea. I think how some of this stuff will eventually work out. Now, I don't think you can completely get rid of like centralization, particularly at once you get to certain sizes of investments, and where people actually really need to know who's on the other side of the table, and needing to have stability of capital and making sure that it's going to be there for a long time. I do think that there's some things that decentralization will take longer to get to. Not to say it will never get there. It's just going like the larger it is and the more complex it is means the least likely it is to get disrupted. Probably in the near term. But that's not to say that it's not going to happen at some point. And I think that's the right question to be asking of, frankly, every company, because we are taking 10-year bets. And so we have to think about, like, in 10 years, is this industry going to get disrupted by Web3? And if the answer to that is yes, then like we probably want to be looking then instead at like who's the Web3 company that's trying to disrupt the space instead. That's the better viewpoint for us.
And it's also just to jump in there. Sorry, you make a good point. It's kind of like it doesn't have to be binary. It doesn't have to be like Web3 fully decentralized or kind of Web 2 totally centralized. It can be kind of both. And I guess just to make it simple, and to make it, I love that. Yeah, I did a post on that the other day, and everyone totally thought it was my meme. And I was like, hold on, guys, let me just be clear about this. It's not my meme. It's a pretty well known meme, but it's fantastic. FinTech on the front, DeFi in the back. But I think that the centralization question is an interesting one from a user perspective, right? Because it's quite simple. Like, you can't phone Bitcoin and say, where's my Bitcoin? I paid it to the wrong person, CEO, please help me. Like, you need call centers, you need customer support. You need to be able to sort of speak to somebody about, okay, I'm staking some stable coin in the Anchor protocol to get my 20%. Hey, call center, can you help me? And this is where like the decentralized world and the centralized world kind of need to intersect. So I love what you were saying there. It's a really good point. I think another point that I want to make is that there's some subtler strategies around Web3, especially when it comes to talent, right? Because talent is probably one of the biggest challenges, and I'm going to ask you this later, but I'm interested to see your view. But it's certainly one of the biggest challenges of fintechs is attracting, retaining, and nurturing the best talent that they possibly can, because there's a shortage. Now, there are enough of the greatest engineering minds moving into Web3 at the moment to really take that seriously. I wouldn't say all of them, but certainly there are enough. Now, if you're not building with Web3 in mind, you're cutting out an entire segment of very, very strong talent that want to at least have a toe in the water with that. So it's also like a strategic part of your talent acquisition pool is if you're not building for Web3, you've just got to be cognizant that there's an entire talent pool that won't join you because they want to be part of that cycle. So, please do go on. That was really interesting.
Well, I think the talent piece is a really interesting point, and I think that it's something we talk to our portfolio companies a lot about. There's also there's some CEOs of company that we're currently chatting with, and the way that she mentions it is she's just like, look, like we're not building anything on Web3. They're a kind of traditional SaaS business, and she's like, there are certain people that actually also just want to do kind of traditional SaaS business. They don't want to do it, and that's. Sure. That's okay too. I think, again, the biggest thing that I've realized in my life and in career is authenticity is probably the single most important thing that like exists across everything. And whether that's your brand as a company or your brand as an individual, like being authentic and saying what you are and what you're not, you will, as long as you're playing in a big enough market, the talent will accrue to you, the customers will accrue to you, as long as you're authentic and you're good at what you do.
And so just to jump in that, Jay, sorry to interrupt, but that's a really good point because the way that like what I heard there, and correct me if I'm just sort of twisting your words, but like that authenticity is usually manifested in a really strong purpose and a vision, and that will supersede Web3 every time. So just to be clear, like Web3 is still quite hyped, it's still quite trendy, and I think you make a really good point. Like a lot of these startups and scale-ups, some of them can pay really well, but not necessarily maybe like Google or the banks or what have you. So then the question becomes, hey man, you can earn the same amount of money wherever you go. You need to have a really strong answer as to this is why you should work for us though. And the answer to that is not just Web3. The answer is here's the vision. Here's the purpose. This is the thing you're going to be part of. And I think you make a really, really solid point there that beyond the latest technology and trend, Web3 in this case, what will trump every time is, hey, come and join this company because you're going to make a difference in this way. This is the vision. This is the purpose. And we see it time and time and time again is that the companies that are having success in attracting and retaining the best talent can always articulate that vision and purpose very, very clearly. And then you're actually, you're bringing people in that will align behind that vision and purpose. So I think it's a critical point.
I mean, I think that, Dan Schulman at PayPal was incredible about this, and I think continues to be incredible about this is, democratizing access to financial services is like, that's his mantra. And then like probably, I got to imagine if you go look at our earnings calls or any of his public statements, the number of times he says that is in the thousands. But it's true. Like that's what he cares about. And if you create a mission statement around that and, people want to join that, it does. Yes. Web3 is a tool in blockchain and et cetera, like are all tools on how to get to some mission. Then it in and of itself, like, unless maybe you're a maxi or something like that, isn't really the goal, at least in my mind. Like the goal is actually just to provide better services to end consumers or whoever you're selling to, right? How you get there is, just the path you decide to go down. But again, it comes back to just saying, being very clear with your vision and ambition, and then being able to attract the right people to that. And great leaders are able to do that. And because it's because they're authentic about it. And two, they're just they're great communicators and they're great at like repeating it until they think they're boring someone. And then, that was something that Jeff Doniger, who was the old COO at Yelp, used to say, if you think that you've said your mission statement enough, like say it until you're tired of hearing it, until you think your team is tired of hearing it, and then say it 3 more times, because that's when maybe you've actually said it enough.
That's so cool because I don't play at anywhere near the caliber of those kinds of people. But when we went remote, which was way before COVID, we were experimenting with remote. And one of the things that I actually wrote an article on it, so at least I've got proof of this, but about 5 years ago or 4 years ago, that was actually my summary of all of my learnings from testing out remote before remote was a thing, was it's all about communication. And when you think you're communicating enough, triple it. And you're probably there. So I got some good validation there from someone a hell of a lot more senior than me. Jay, I've just realized the time. I mean, this is flying by, which is always a good indicator for me. And before I get to the rapid fire questions, I do want to ask you one quite specific question. And that is, and you don't have to share this if it's sort of confidential, but you've now made 8 investments in quite a short space of time. You probably have spoken to hundreds of founders, I'm guessing, or at least dozens. You have a massive lens into this world. What are the 1 to 3 most common challenges that you're seeing in your companies that are pitching to you or your portfolio companies?
Yeah. Well, now it's been, so we have 8 investments and I got to think that we've talked to well over 1,000 companies since we started doing the Infinity thing. It's, there's a lot going on across. We're a global firm as well, so we're kind of looking everywhere. But I would say, in terms of, the top challenges that we're seeing, I think number one is just hiring and talent. And that's just, across the board. And that's probably the biggest signal for us as we look at stuff that is going from, pre-seed to seed and then seed to A is like, yes, there's, obviously, do we believe in the market and the company and stuff like that? And like revenue traction is obviously something that we're looking for. Like, what are people willing to pay? But the biggest thing that we actually, frankly, are focusing on right now more than ever is just, are you able to hire people and like, what's the quality of talent you're able to get? And like, are those people bringing on, are you getting like organic, like referral growth from your own employee pool? Because that is, such a reflection of, the market opportunity that they're seeing and the, kind of culture that you're building. Because if you don't get the people, you're not going to build the thing, and then the thing's just not going to work, right? Like, and so in today's day and age, that is, probably the biggest problem that we're seeing. I'd say the other thing that we're just seeing is just there's so much noise, and there are more startups than ever, and so many of them look the same, and particularly in fintech, for every time you see one company raise, like 6 others pop up. It's like this like whack-a-mole of like just like the number of startups that are trying to attack a certain problem. And again, like it's a big market, and there will probably be multiple winners in each market, but the majority will accrue to the winner. But in a market of that much noise, the thing that we look for is who's figured out distribution. Like we're not like, yes, product is very important but product is table stakes now. Distribution in our mind, particularly in a world that is flush with capital. And so you're going to continue to see companies get funded that have like similar types of products or maybe slightly better on one thing or the other. The thing that's going to matter is like who's figured out distribution in a capital efficient way. Like, again, anyone can raise a ton of capital and go buy ads on LinkedIn, Facebook, wherever it is, depending on who you're trying to acquire. But who has figured out how to do it in a really, thoughtful, efficient way, working with channel partners, doing the stuff that like is tough, but like can actually build a scalable, repeatable business. That's the stuff that is hard to do, but is the stuff that we're certainly looking for.
Man, so much wisdom there. It's not our more mature customers, but when we get sort of inbound inquiries from like first-time founders, and we sort of give them an estimate of what they're going to spend on the tech side of things, and they get a fright. Then we tell them, whatever you're spending on the tech side of stuff with us, you probably want to spend 2 to 3x on that in your marketing and go-to-market stuff. And then they get a real fright. And, I'm talking the sort of very wet behind the ears first-time founder types. The more mature founders, the ones that are actually being successful that we work with and that we come across, it's absolutely that. It's kind of like, I love what you said there. It's like product development is incredibly difficult and important, but it's table stakes. Without that, you're not in the game. The guys that are killing it are the ones that are going, great, this is route to market, this is distribution. So really good to hear that from you. It's huge validation. And
that's the thing that, like, by the way, I look for a lot in founders is, and I'm sure some of them get tired of when I send it to them, but like my favorite single thing in like business history is, Walt Disney's like back of the napkin drawing of the corporate strategy for Disney. And it's like at the center of it is content, but then it's all the different ways that he thought about monetizing that content and how each of those things played into each other. It's like you build content and then you get an amusement park, and inside the amusement park, you're going to sell, toys. And like each of these things, basically flow together, and they're effectively loops. And how do you think about your company's loops and how each of the different products you have either lead to more people coming into the door or increasing the monetization of those existing, users. Yeah. And the founders that have this like clear vision of saying, hey, this is the thing that we do today, but it's really like the broader plan is it goes into this, this, and this. Like, we're looking at stuff at the seed stage. Sometimes the product's not even built. But we want to know that there's a plan, they've thought about it, and they understand what that long-term value ends up looking like if they're successful on each of those journeys. And understanding that there's going to be decision trees within each of them, and they've thought about like what happens if then that. Like that to us is super exciting.
I have so many more questions, but I'm going to have to cut this episode short and get you on again because I've got a whole, I've got 3 or 4 more entire themes that I actually want to cover with you, never mind questions, but we're going to have to cut it short. Not cut it short. We're going to have to start winding up and get you back on again. So I want to shift to some more rapid fire style questions. So what is your biggest challenge or fear in business?
Failure, to be honest. I don't get a lot of sleep at night, especially as we're a startup in and of ourselves, man. And we've got to make a bunch of great investments, and we've got to help those founders grow. And I got 2 kids, and I want to leave them a great legacy, and I want to make them have a better life than what I had. So failure is the thing I fear most.
What single piece of advice would you give your 20-year-old self?
I had a great 20s. So I don't know. My only advice is frankly to just keep working as hard as I did and keep making as many great friends and continue to invest into your friends. professionally, personally, financially, if they're raising a startup, just, continue to be like, invest into that karmic capital that hopefully comes back and pays off down the road. But I feel like I don't have any real regrets in my life. So I feel pretty good about whatever the hell I was doing back then.
I love it. What content are you consuming currently?
I certainly have a list of the newsletters and stuff like that I'm always kind of reading the Axios stuff, all those things. But I would say that my Twitter feed is frankly like where I get most of my deep insights and knowledge. Twitter is this like amazingly like free product that is, you've got the smartest people in the world contributing their thoughts on like where the world's going. And I can just sit there and be a fly on the wall to understand it. Like it can become an echo chamber sometimes. So I don't like to just only look at it, but there's great thoughts there. And if you can take those thoughts and then have, frankly, genuine conversations with your friends. And I have a number of great investor friends that I'm constantly talking to or texting with at night, and just having debates on this stuff. Like, we live in this great generation of interconnectivity, where we're able to share ideas at rapid pace. And so just being part of that flow, like that's kind of where I'm consuming my content, but it's also, you got to be a participant too, because that's how you get a lot more out of it. And it's a ton of fun.
Yeah, I love the way you've you've articulated that. It's kind of how, I consume a lot of content on every channel. I think my favorite is probably the All In podcast with Chamath and David Sachs and all those guys. And often I'm sitting there listening to this and just going like, this is free and this is available. Like this is crazy that I can sit here and just consume these guys' information and then go to Twitter and get their deeper thoughts and threads. I really think you articulated that amazingly well. What is the last book that you read cover to cover?
I read a book on DeFi in the future of finance. I think it's right here, but it's actually this great book on effectively. It was Fred Ersman, who's now over at Paradigm.
What's it called?
It's DeFi and the Future of Finance. So I'll
do you recommend it?
Yeah, I thought it was a really frankly for it's a very digestible book. It's very approachable for even someone who's, you don't have to be super technical to understand it. They did a really good job of kind of breaking down this space. And what's funny is it was written in 2017, I want to say.
Oh, wow. That's early for that. That's really early for DeFi.
If you had just gone and bought every single token that these guys talked about, I'd be retired right now. It is comical. They're talking about Maker and Compound and Aave, all these things that you could, it's just that was a miss. I should have read that in his book a couple of years ago.
Yeah. Awesome. So look, you mentioned you got 2 kids. I also have 2 kids. That means that there's the whole sort of work-life balance, integration, whatever word you want to use. Just tell me, in short form, what are maybe some habits or behaviors or routines or rules that you have for yourself to fit it all in, to not become a mental health, news story, and to maintain some kind of optimum thought, performance, etc. Talk to me about your rituals, your habits, your behaviors, or not. Maybe you don't have any and you just wing it like a lot of us do.
No, I think I used to try and wing it, but I think as things have gotten, frankly, I don't know if they've gotten crazier or whatever, but things that feels like we're packing more in. Yes, we're working from home, but I think especially in an industry like venture capital where everyone's in a type A mentality, we just decided to take that commute time and just say, sweet, I'm just going to tack on 3 more Zoom calls in here, because it's just more shots on goal to take a look at. And so what I've done, the 2 things that I try and do every day is, 1, I work out every day for not super long, but you get 30 to 40 minutes of exercise, and just to make sure that you kind of clear your head. And frankly, it's just so important statistically to kind of do that stuff.
I can see the Peloton behind you.
Yeah, the Peloton's great. I can hop on that thing for 30 minutes and I'm good to go. And then, usually I try at least from 6 to 7:30 to just be with my family and try and, for the most part, not be on my phone, and spend time with them, eat dinner, put them to bed, and, make sure that I'm there with them, because, this is, yes, work is a great component of my life, but it's not everything. And, we all do this for a purpose, and the purpose is to kind of, be with them. So, trying to make sure that I at least carve out some of that time. And that has been, very important.
Yeah, love that. I mean, we could speak for an entire episode on that. Cool. I mean, look, you're a busy guy. You're a super focused guy. What are you doing in the next 7 days? Like, what is something in the next 7 days that you're doing to improve yourself or your craft?
What's funny is that I don't know that there's one thing I'll do in the next 7 days, but the thing that I certainly try and do on a weekly basis, and this usually happens like kind of Sunday evening, is just reviewing the week prior and then the week ahead and trying to understand, like, who did I meet? Which meeting really stuck out for me? Because I think the hardest thing in our job is, we'll meet, call it 10 founders a week. And it all kind of becomes like a blur, But you got to go back and think about, okay, of those 10 meetings, like, which one, like, can I not stop thinking about? And, like, who had the idea that it's just like, I can't shake loose? And if you ever get that feeling, like, those are the ones that you really want to, like, dig in on. And you want to really, like, also make sure that, I think the other thing I try and make sure is, like, there are people that are great at pitching, but might not actually be great at, like, running a business or have actually the best idea. And it's very hard when you're on the call not to fall in love with those that are, amazing at pitching. And so what we try and do as a firm is we basically say, like, we try never to agree to invest into a company, like, on the Zoom call. Because, like, you will get trapped into that thing. Like, we always basically say, look, give us a little bit of time. We'll go talk to ourselves. Frankly, just need like a cooling off period for like a couple hours at least, and just say, like, okay, am I as excited as I was when this person was pitching? Or, like, here, you need time to kind of think about, how does this business maybe not work? Or, like, what are the things that you got to get comfortable with? And so for us, like, also taking a chance to look back at it allows you to think about the people who maybe aren't as polished on the pitch, but actually have a great idea. And maybe they just aren't, maybe they didn't use the right words that triggered the thing in our head, that saw the vision that they're doing. Because all of these people have made this tremendous leap to say, I am dedicating the next 10 years of my life to this journey. And so they must have seen something that said, this made sense for me to do relative to taking a lower risk opportunity at, like, some big company to get paid a lot of money to do this thing. They saw something. I need to figure out a way to get into their shoes to see what they're seeing. Because clearly they're like, they've seen it. And so, trying to take some time to just look back at that, and then looking ahead to the week so that you're ready when you're meeting that next person as to, what should you be thinking about when you hop on that call, so that you're, honestly they're dedicating their life to it. They're giving you an hour of their time. I want to be prepared as I go into those meetings, because they've done, their part. I need to do my part as an investor to make sure that I'm actually asking the right questions. Because if not, I shouldn't waste their time. That's not appropriate.
So much there. I'm still trying to actually just digest that. That was awesome. That was an awesome reflection. And, when you're looking at 1,000 companies every 8 months, I can imagine how blurred the lines get. I mean, you probably struggle to remember people's names, and it's got to be tricky, man. Look, Jay, this has been absolutely amazing. Do you like to be contacted or followed? And if you do, how can the listeners best contact or follow you?
Yeah. I would love to be contacted. My email's just jay@infinityvc.capital. And then if you want to follow me on Twitter, you're welcome to. And my handle is @JAYR Ganatra, Ganatra. So,
Jay, it's been super cool. I mean, and I say this with a big smile on my face because I love it when this happens. This took totally different directions to what I thought it would, which is fantastic. It was just so natural, and I've learned so much. We bounced around a lot. I asked you a lot of questions. You took things in lots of directions. But if there was just one thing that you would want the listeners to leave with, one idea, one thought, one piece of advice, what would that one thing be?
Man, I would come back to just this notion of authenticity. And, I think that's probably been the biggest thing for me in my career that has helped me, and has also helped kind of direct where I ended up spending my time, and kind of how I ended up getting to do this, was just really figuring out who you are as a person and what makes you happy. And then everything else kind of flows from that. Like, if you view life as this, like, giant equation, which I'm somewhat of a nerd or robot or whatever you want to call it when you think about it, but it's like, who are you going to be with? What are you going to do? Where are you going to live? And who do you want to spend your time with? So it's like, I've found my wife and I've got kids. I love the Bay Area. I love early stage investing. And I've got a great group of friends to celebrate those wins with or commiserate those losses with when they happen. Those are the four, variables in that equation. And if you can turn those variables into constants, then you actually solve the equation, right? And so to the extent that you can figure out, all of those things require you to be authentic with yourself as to what it's actually going to maximize the end of that equation, right? If they're just adding up. And so, being authentic with yourself allows you to understand what are you solving for on each of those. And so the more people can do that, that's more of a life thing than it is a business thing. But even in business, right? You want to be creating a business that you're super excited about too, because you got to show up and do it every day and people can read through when you're inauthentic. So figure out the type of company you want to create and you're going to have a lot of fun doing it. And those that have a lot of fun tend to be the most successful.
Man, so much there, Jay. I'm battling to carry on with the conversation because I'm processing that. But I just want to say thank you for making the time. Thank you for being so authentic and talking to us today. I think it's going to be a fascinating episode to many listeners. One of my favorites so far. So thank you for making the time and thank you for sharing everything.
Of course. Thanks for having me.
And to the listeners, I know you would have gotten a lot of value from today's episode with Jay Ganatra from Infinity Capital. Look, I sure did. I'm struggling to articulate a main takeaway, but I think it's going to be around, I'm not sure that I've had a guest on the podcast that is as deliberate and well thought through on pretty much everything as Jay. And I'm certainly feeling super inspired by this podcast. So thanks for listening to the show. And I will be back next week with another episode of the Fintech Founder Journey. And if you have a fintech or blockchain product that you want to talk to us about, get in touch. You can book a consultation with one of the founders on our website, www.nona.digital.